Hey, good morning, everyone, and welcome to the morning brief of Monday, 13 July. Let's go ahead and go over the podcast numbers real quick. Still just 6 members, working on that though, but 27 total episodes are out. And notice the big jump up in the number of downloads up to 921. So kind of what's going on with the podcast is, if you've noticed, I've designed the podcast around a series of questions. So outside of the Financial Thought Leadership series, there's a series of questions. And what I did this weekend is I'm on 2 or 3 different financial Facebook pages, and people, when I saw somebody ask a question, I would simply reply to it with, I have a podcast that talks to, free podcast talks to that. It's episode 6 or episode 26, whatever. So kind of answering questions that way on Facebook, and hopefully that'll bring traffic in and we can go from there. As far as the site itself, I had 3 people actually go in and ping the morning brief, so 0 of which subscribed, but at least folks are getting now, again, from the podcast. Do you want more? Yes, go to the webpage. What do I have available? The morning brief is what I have available for you should you choose to join. So they're at least taking a look at it. I am going to use a one podcast to actually, now that I've actually got somewhat of a followership, a whole podcast to actually talk about the morning brief. I anticipate that this week. So with a podcast dedicated to that, now if somebody starts talking, trading room stuff, or because a lot of the trading rooms that we're in, we're not really a trading room, we're investor education. But if somebody is online talking about a trading room, I can say, I've got an opportunity for you. Cost you $25 a month. We'll get in, smart people putting their minds together, sort of thing. So we'll see if that leads to some traction there. So I'm hopeful. Also this week, have 2 podcasts where I'm the guest on the podcast this week. So that's kind of cool. One's in New Zealand. The other's up in the Northeast. So we'll see if we get some traction there. And then I did the Financial Thought Leadership series for the kickoff on July 1st. That was wildly popular. And now it kind of transitions to when to do that again, which I think I was talking with Rochelle last night. I think I'll do that again, probably sooner than later. So right around August 1st, maybe do another series of 10 individuals, then probably call that good until early next year. So anyhow, that's kind of the big picture with the podcast. Couldn't be happier. I think the content is strong. So I think it'll continue to see traction. Okay. For everybody out there, a good morning. All right, 3 objectives today. We're going to grow our money, protect our money, and live off our money. The long-term investor topic today is theme park stocks, which outside of Disney is kind of what I would call how to lose money. But they are out there, and they're very cheap. So we're going to take a look at them, and then I'll give you my recommendations on them. The academic topic of the day is the SPAC, and that's what this term's kind of gaining traction. But now that you've heard it a couple times, I want to go back and review exactly what it is. So Special Purpose Acquisition Company is what it stands for. It's what, when I say they're doing what Donkey Kong kept calling it that for so long, DraftKings did. That's what I'm talking about, is a closet IPO, and it's a lot cheaper than an actual IPO. And there's names popping up left and right that are following this different way to come public, and I think it's going to be the wave of the future, to be honest. It's pretty darn smart. So we'll take a look at that today. As far as our flow, we'll start talking long-term stuff, go into short-term stuff. We'll execute the market open, watch our short-term plays play out, whether they are up or down, and then we'll get transitioned back to long, and I'll talk about the special acquisition stuff and what's coming or what's expected. There's our 6 names. So Disney, Cedar Fair, SeaWorld, and Six Flags. Those are kind of the big 4. MSGS is Madison Square Gardens Sports, which is kind of a holding company, which has different facilities in it. Then EPR is the ETF called Entertainment Properties. Not really related to the theme parks, but it is another way you can invest in the leisure space, if you will. All right, any contingencies? Steve at ototnow.com. Heard we had a successful resolution this morning of an issue, so that's why it's there. And our disclaimer at the bottom is this is an educational presentation, so you have to treat everything you hear in this presentation as information only, and do your own due diligence before you take actions on your own account. All right, with that, let's go ahead and take a look up at the TD Ameritrade and talk about our year-end review. All right, so again, mostly focusing on the channel. The S&P actually right there on Friday, executed above a golden cross, which it's only happened 26 times in history, and it's an extremely bullish signal. And if the market just continues to scream higher for the next like 3 weeks, it will validate the fact that it was because of this golden cross. So what's a golden cross? It's where the 50-day moving average moves back above the 200-day moving average. Blah, 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 a lot of technical, blah, blah, blah. But there's people that believe in this, and kind of like, I always say, take a look at the technicals. I invest off the fundamentals and a long-term thesis. But I always look at the technicals because there's a lot of people looking at them. So it's that self-licking ice cream cone of, if enough people look at it, enough people start to believe it, then it can actually become reality. So yeah, it's a hugely bullish signal. So we shall see. Is all I can say is we shall see on that, but it's there. Okay. And the futures are up today. So that's why we're in the green. So let's take a look at the past 5 days. So there's that kind of look at the move up on Friday. Friday was kind of interesting because started kind of flat and then it just kept going up, 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 up through the rest of the day. And of course, a strong finish. Anytime you get that strong finish into the close, it gives a trajectory higher. This weekend was pretty light as far as headline stuff. But the biggest headline I saw was Trump wore a mask. And it's just like, okay. The president's finally wearing a mask when he goes into a military hospital. It's just like, yeah, I think that's probably the right thing to do. I get what his stance is, but let's just go ahead and do the right thing too, and wear your mask. So I thought that was kind of cool. But we'll take a look at some other headlines here in a bit. We'll go over to the calendar. This week starts if you find Pepsi, PEP, there you go. The Pepsi released earnings this morning. They beat earnings, which I don't know. It's kind of not too much of a surprise that beverages would be doing fine in a work from home environment. But what's really more important is that this is the beginning of earnings season. So when you think earnings season, think each quarter has 12 weeks, 13 technically, but mentally you can kind of picture 12, right? On average. The earnings weeks last for about 6 weeks, where I think it's 90% of the companies release earnings during earnings season. So it's kind of a long thing, but this is the first week that kicks it off. So that's kind of cool. So we shall see. Earnings can take the markets obviously higher or lower depending on those earnings, and could go either way. But Pepsi's going higher this morning, so that's something we'll take a look at when we get into our investing. All right, let's take a look at the around the world. So there you can see the futures in the green across the board. So looking pretty good. We'll go over to EU, which they were also green, up over 1%. Over to Asia, also in the green, even more so, 2% there. And then Japan. Back to us, there's our Friday numbers. Again, a lot of that was late in the day, so marching higher. It's like, all right, over to bonds. So everything's slightly in the green there. Again, if there's any section that could be healthier, it would be bonds and interest rates kind of creeping back up. They're going to be down low years. I mean, it's so hard for them to creep up, but it'd be nice if they did. All right, let's look at oil. Oil's down, but still above 40. Can't complain there. And then off into the precious metals space, up across the board. So again, silver, I didn't see that. Almost up to $20. So there you have it. All right. Again, if you want safety going into the election, this is one way to do it. I don't really do that, but you can. All right, over to the pre-market, and we will go into our headlines for the day. So you see Pfizer and BioNTech. BioNTech's a German pharmaceutical firm. Both get fast track status on the vaccine. So really when I mean, sure, day tradable, you can look at it, but when you think long-term investing, I think there's so many gains being made in the space of vaccines that, if you talk back to April, May timeframe, everybody's talking about, are we going to have a vaccine in 2020? I don't know. I'm sure from the data I see, it sure seems like we're going to. And if we do get a vaccine in 2020, then that's obviously going to carry the market higher. It just is. So vaccine hopeful headlines are good. We still haven't really seen that big breakthrough, right? But at least the headlines are good. Okay, wild earnings season. We already talked about that. So earnings, remember there are three parts of earnings. You talk about revenue. So think balance, or balance sheet, top line, or P&L, profit and loss, top line revenue. And then you have earnings, bottom line, and then you have forward guidance. So that's where not only do they, sometimes you can beat on revenue, beat on earnings, and then guide down, meaning we don't think our next quarter all the way out to next year is going to be as profitable, and then the stock can get hit off of something like that. So we shall see. If you remember the last earnings season, think April, guess what? Everybody was like, here's our revenue, here's our earnings, and literally, that emoji, if you've seen that of the, I don't know, shoulder shrug. So a lot of them didn't even produce forward guidance. So now we should see things starting to get some guidance as to what the future looks like for these companies, which can move the stock. So we'll keep stay nimble going into earnings season is always the advice. Okay, there's Pepsi. Whoa, revenue falls 3%, but the stock was up. Boost snacks business. Overall, it was a beat. So revenue was down, but probably profits were up, and they guided up as well. All right, let's take a look at some more here. Cauliflower rice. Interesting. Apple, I believe, got an upgrade. I'm looking at the analyst calls for 5G. So Costco didn't see that there. And then Disney, obviously Disney World, we're going to talk about the theme parks today. Disney World open on Saturday. So what does that look like? Yep, you're wearing your mask, but you're still paying $7 for your hot dog and Coke, the good stuff, right? But it's a positive sign, even though, of course, Florida set the nationwide or worldwide record for 15,000 cases in a day or something like that yesterday. People are getting out there, getting out and about, and getting back to living their lives. Okay. There's a buy rating on Disney. So we'll talk about that here in a minute. All right. I do think there will be a stimulus bill coming up. So I do expect that the $600 extra per week unemployment benefit, I do expect that to end at the end of the month. So there will be some pain there for some individuals, of course. And then, I'm Coke Zero kind of guy. There, Predator, I see your comment. Let's see. Fast track. Yep, we talked about that. As far as tax implications that come with M&A, I will tell you this is kind of funny. So for the long-term buy and hold people that have stuff in a taxable account, sometimes the M&A activity can absolutely crush your taxes. So when you hear things like all stock deal, that's good, because that means whatever company is gobbling up the other company, they're going to do it all in stock, and this stock's company is going to go away, and you're going to get shares of this stock. No tax implications. Makes you happy. However, sometimes they'll say, a third of it's going to be in stock and the rest of it's going to be in cash. And I had a close couple that got a huge tax bill. We're talking six figures kind of stuff based off of this exactly happening to them, and there was no way around it. So, what can you do? So just Ray, sometimes that bomb can drop on you. All right, let's go up a little bit more, and we'll close out the headline review. There's the cauliflower rice. All right. Yeah, we got and you see the Redskins officially going to retire their name. So yeah, I see the point, probably about right. But we'll see what they come up with. Okay, that's enough on the headlines. Let's go over to the big board on Schwab and take a look at what's going on here. First of all, in the upper right, you can see CNBC. Well, of course, as soon as I say that, it goes to commercial break. They were showing Disney World, and for those of you that have been, it'd be probably the right time to go because there's not as many people there as normal. So it can be pretty miserable when it's 100+ degrees and packed. So, okay. So as far as the leisure space here and the big theme parks, Disney is the only one I would touch. Disney is a long-term hold. It is clearly best of breed with a moat. It's got a highly addictive product, and it's got high margins. Obviously, you're paying over $100 to get in the door. You're paying $7 for your hot dog and Coke. I say highly addictive, meaning if you have little kids and you're in the demographic that can afford to go, I get it, not everybody is. But if you are in that demographic, your kids will drive you absolutely insane before you take them. So you kind of just give in and take them, right? Don't judge my parenting, but that's what happens. So Disney has also a problem child called ESPN, which you would think is the greatest name in sports for, sports for broadcasts, and it is, but it's just hard to get, it's hard to be profitable. And they should have spun off ESPN years ago and let it go try to survive on its own. But as it is, they've kept it in-house, and it continues to be a drag on their balance sheet. And especially in sports aren't out there, and they're putting crazy stuff on TV that I'm sure your true sports fans are watching, but most of us have tuned out until live sports comes back. But if you look at the track of the stock, it was kind of doing nothing all the way into February, and it started to fall off for COVID. Yeah, it's recovered some. Disney's one of those that if you like it, you want to be a part of it, and you buy it, you put it in your portfolio, and done. Don't be selling it and trying to buy it. It doesn't make any sense ever. So you just put a chunk, whatever your position size is, of Disney in there and be happy with it. Of note, it does pay dividends twice a year. It's the only stock that I know of that I'm in that does that. So it's kind of interesting to me anyway. Okay, fun is Cedar Fair. They own Cedar Park as well as a few others. Again, when you look at SeaWorld and Six Flags, you can kind of look at their charts together. So I will talk about them together. SeaWorld doesn't have a dividend. Again, they were taken private years ago by Blackstone and re-IPO'd, and they haven't been healthy enough to put a dividend out. And I would say that they would be my least favorite because they're always running into issues with animals, and killer whale eats a trainer once every 5 years. So it's not like we're done with that happening. It's going to happen again. So I don't know. Wouldn't touch that one for sure. The other two, not for me. But if you wanted in on one of these, they do have dividends, and I think it's quite sizable. Pull up FinViz, and I'm doing this on another screen, just looking at something. Put fun in FinViz. If they haven't cut their dividend, it's up to, it looks like they've cut their dividend. Go and scroll up here just a little bit. Okay, so they have suspended their dividend for fun. Let's see about Six Flags. Looks like they've suspended theirs too from the chart. Yep. So fund was getting up towards like 14% on the dividend. So, when you get that, it's like people are like, yes, big dividend. It's like, no, they can't pay that. You know that. So they cut it, and everybody's surprised. Shock faces all around. But there will be a day, I think, when we get healthy again as a nation. And I do think people will flow back to these because they are good family entertainment. And if they reinstate their dividend, if you were looking for a trade, that would be more of a swing trade. When you think we're at that point, you would buy into these names, wait for them to increase their dividend, and then sell back out of them. Okay, the bottom left one, Madison Square Gardens. Don't know much about them other than they own several facilities in addition to the gardens. Excuse me. No dividend there. They've cut it and wouldn't touch it. Then the bottom right is EPR. That's not, again, per se into theme parks, but it is something to take a look at for the entertainment space. These are the parent owners of the properties of Topgolf. They are the parent owners of the properties for like AMC, for movie theaters and things. So pretty challenged space right now. Took a big hit out of the 80s, obviously down below 20, yikes. And it was an unholdable holding when that cliff started down here. I mean, look at that waterfall. I was not out of it nearly soon enough, eventually just blew out of it because there was no hope, and then still really haven't returned. There will be a time to return to EPR, and it's a real estate investment trust. So again, when that happens, I think you will see a pretty heavy move higher with EPR, but it's too soon in my opinion. Okay, that's what I've got for the long names. Let's look at the short names. First one we'll put up, I'm sorry, not short-term names. First one we'll put up there is Pepsi, PEP. See how the stock's doing off of the earnings this morning. Right, it was at 134 up to 137. That's a couple of percent. Let's see, 1.8% saying there. Bunch of headlines, right? So it beats by, that's it. PepsiCo beats on by 7 cents and beats on revenue. That's what I thought I read earlier, but we covered that headline, said something different, but we shall see. So a lot of good news there for Pepsi. So that's something we can take a look at long. And then Pfizer, obviously, on fast tracking the vaccine, is gapping up 33.83 up to 34.85. Percent's not jumping out at me, but what's that? A couple of percent, maybe 3. We shall see. And then BioNTech, BNTX, maybe. Yeah, BNTX. So 70 up to 78. So there you're looking like, what's that, 8-9+% for moving up there. So pretty big jump. I would be more inclined to probably jump on that name instead of Pfizer, but we'll take a look at all of them. So potential long plays. Remember, the market is already long this morning. So we shall see. All right, NEO continues its streak. Only goes higher. That's just crazy. I wouldn't touch it. SPAC, SPAQ, guess what? Is a special purpose acquisition company. That's what we're talking about today for our long-term stuff. There's a behind the scenes play where SPAC is going to IPO as this medical group, which I have on my, I have a headline I'll pull up later when we talk about long stuff. And then, but that underlying medical group is up like 58%. So we shall see. Workhorse is in the news this morning. Nice big jump there. You know, that's a name I like. Remember, they're the drone delivery and that last mile EV. They have a request for proposal with the U.S. Postal Service. So I have big hopes for that name. Hold on, strap in if you're in that one, because it does this like every day. So it has not found its home yet, but certainly Workhorse long is something we'll take a look at. Again, no headline there that I know of. Altimmune, I am not familiar. Let's click on that and see ALT there. So surges on positive preclinical data. Okay, gapping up from 22 to 25. That's what, 21%. So it's kind of out of our window. But if you were going to take something out of our 5 to 10% window, it's going to be a biotech, right? It's going to be something related to healthcare and tied into COVID. So we'll keep an eye on it. Alt long, and that was on basically COVID. Okay, let's take a look at, yep, the next tab there. Thank you. Maxim is the one that's getting bought. There was an acquisition this morning. I wouldn't touch it, but it was the buyee, not the buyer. Tesla, $1,650. I have no words. No words. I did say headline they're dropping their price $3,000 on their Model Y, which is their little SUV. So I do think that the little SUV that is a pretty good car. So I think that's going to get a lot of sales too. But again, what's the hope here? I didn't see a headline related, but I don't need to. It's the S&P inclusion. As soon as they release earnings, they'll be eligible, and I think the S&P board will pick them up like that, so it can help their index. But we shall see. All right, Netflix gapping up. Netflix's earnings are, I think, tomorrow, so it's probably up in related to earnings. I wouldn't try to day trade it before the earnings, but tomorrow certainly I could see it jumping through the roof there. All right, let's see what else we have. The Amazon moving up nicely. Nothing really gapping up there. Let's take a look short. All right. Gritstone's moving a whole lot. I have no idea what that is. ONC, maybe oncology. Let's bring it up just so I see what the name is. Oncology, yep. So cancer stuff, no headlines, but there's obviously something in the water there. Again, if you were to take something that's you think could shoot up, that wouldn't be a bad name. I like the price point entry for sure. Not enough volume in the rest of that stuff really until we get down to analog, and that's the buyer of Maxim, if I remember right. Not enough of a gap really. Okay, so not much on the short side. Let's take a look at the next tab. There's SPAC and SPACs /U. I'd have to look that up. I don't know what that is. Maybe a different share class. Herbalife gapping up. Let's take a look at Herbalife, HLF. It's in the middle there. Low volume, but 45 up to 48. Seeks to purchase. Okay, it's a stock offering, so they're going to get some more money onto their hands. I wouldn't touch that. We might. I wrote it down. We'll circle back to it. It's not something I would trade. Okay, since we're talking about acquisition corps, they're kind of picking up some steam. So you see down at the bottom right, JWS is the Jaws Acquisition Corp, Flying Eagle. So when I explain these later on, it is literally a shell company. So you think of companies that don't exist, like out of the movies, offshore shell companies. Well, these are onshore, but they are literally there's no company there. And then Golf, Cushnet Holdings. I'm not familiar with them. Let's bring them up just because I have to explore a Golf ticker. I know, Berner, you can explain that in a sentence in the if you want, if you're familiar with them. I am not. Skechers gapping up, low volume. Okay. All right. 3 minutes to the open. Let's go ahead and get things set up. We'll take you over to the TD Ameritrade screen. I have nothing written down for short, and I like shorts, so we shall see. Probably BNTX. I saw somebody, Old Faithful. There you go. Luckin. I think you're right. BNTX is probably the best long. Pfizer, Pepsi just is not going to get the love I think that it is going to get. Click on bring up Alt over here, ALT. How much little volume is that? Oh, it's got the volume, 22 up to 26, Alt Immune. I like the numbers on Alt Immune, so I will take Alt Long. Do I have time? Type it in. Yep, I got time myself. All right, I'll take Alt Long. All right, let's put Alt in one of these up here and get that set up with, we need to have BNTX, LKNCY, and Alt. Down to 26. I can't take a dollar stop in that name. Looking down at 352. If it opens there, it'll go straight up. So pretty smart taking it at the open. You could take that with real money. Okay, Cushnet Titleist golf balls. Got it. Alt 27. Oh, I guess I'm gonna have to put a dollar stop. So Alt Long, $1. How am I doing on 40 seconds? Alt Long. I want to get away from the open, so 2 minutes out at 10 min. All right, there's my trade. I'll take Alt Long. Again, dollar stop. I don't know if that's big enough, but I think I'd rather lose an R there than try, in my route to making 3R. Ha ha ha. Predator, you're so funny. Okay. So those are our 3 trades in there. Again, very optimistic about luck, and if it actually opens at 3.5, that's going to go straight up and Burner wins. There's pretty much no doubt about that. All right, 349. I think we took it at the open here. And let's see what's the stop on Luckin. 20-cent stop. Okay, maybe tough to get, have to get, obviously. That's, I think, very safe stop for sure. That's a 10-cent is drawn. All right, let's see. BNTX popping up. Alt coming in. Yeah, if you're taking this real world burner, you can you go ahead and get in. I like that. I like that action right there. It's got a low volume. The volume hasn't picked up. When the volume does pick up, it's going to pick up to the upside, if you will. All right, overall market's moving higher, up almost 1% in the S&P. Looking at that off at the left. All right. Okay, BNTX just started at 1, so he got the 77.7 entry. And what sort of stop? BNTX stop at 50 cents. I think you made it, 77.2. It's going long, so stops down here at 77.2. So it held that so far. We'll keep an eye on that. All right, 15 seconds and my trade will open up. Again, that'll be alt and it'll be long. I like the setup for it for sure. Market just had a big stripe down there going into minute 2. All right, 27. Scroll left, you missed that bar. There we go. 27.30 it looks like. I put a dollar stop to 26.30. I think I just got stopped out. So we'll take a look down there right to 26.30. Let's see, and you can look up there. Low is 26.3, so yeah, I'm out. So alt did not last long. I like the setup there. All right, over in Luckin, 349 has down to 329 is the stop. So we'll throw that there. So it's getting close, but it's holding so far. And I think just, well, it's printing 330 there as the low. So you're holding right there. All right, BNTX is working. It's a 50-cent stop, so it's up an R already. So very nice. And market's whipping around pretty good. All right, and that left pane looks like Luckin just got stopped out. That's pretty crazy. Down at 327. All right, let's say in the alt screen, let's take a look at Pepsi long, PEP. People not buying into the Pepsi theme. So it was up almost 2% down. Yeah, still up 0.5% on the day. So get rid of that one. Let's look at Pfizer long, PFE. Okay, came in. It's only about 30 cents though. So people not ready to get into that name either. The other one that got on the fast track was BNTX. Oh, yeah, we got BNTX in the middle pane there, so never mind tracking that. It's kind of whipping all over the place, huh? Went all the way up to 79. So let's see, at a 3R point, would 79 have booted us out? I think so. So in at 77, so there it got stopped out too. But buck 79.20 would be 3Rs. Yeah, so it wouldn't have quite made 3Rs there from where it touched. So all right, all 3 trades are out. It's kind of crazy. Let's look at Workhorse, WKHS. It's up 16% pre-market. It's only down to up 10% now. Still pretty good move on the day. It's not a bad entry point there on Workhorse after it comes in almost 5% at the open. Again, I still like getting into luck in here. Let's go. Alt was the one I had. We looked at that, and then HLF, the Herbalife. That was a long, not much volume there. All right, so that kind of covers our short-term stuff. So it seems like a really surprised all those came in, but that's why we like going short, because that's better. All right, let's look at go over to charts, and we'll take a look at how the long-term investments are going. Start to switch our mindset to the long. All right, Workhorse up 12, Tesla up 10. That's crazy. If we can go to the main screen over here, we'll see what Tesla's at. 16, 17, 15 on Tesla. I mean, that's just a straight short whenever you can feel like getting in there and doing that. All right. Crazy. Look at that chart. Crazy. So that's literally in a little over a day, it's gone from 1,400 to 1,700. So in the stock world, you call that a hammerhead, where something goes up and basically it's coming right back down. Tesla might be stubborn enough to be able to hold on to it. I don't know. I'm gonna take a look at that today though, because that price is actually so not realistic. It's not funny. All right, NEO's up pretty big. NTR, we don't talk about that a lot. It's Nutrien, potash for fertilizer company. Sony's up. Sony's been kind of a march higher, just due to the PlayStation 5 upcoming release, and it's supposed to be one of the best sellers, if not the best seller for the Christmas season. But yeah, I'm talking about Christmas in July, but stocks get priced in first. CLIS, Clickstream, supposed to be an announcement coming out today. We'll see if it does. Trade Desk, Northwest Bio, Twitter, Apple up a couple percent. So Apple is at 391. So knocking on the door of 400. I have a ton of calls sitting right at 400. So that would be impressive. Yes, and WBO, everybody's favorite, or burner's favorite, however you want to say that. Amazon up big, 32.50 on Amazon. So when you think of the market being up, let's refresh these and see where we are. The market is up big again. It's a lot of individual names carrying it higher. So I'm looking at another screen, almost up 1% on the Dow and S&P, and then Nasdaq's up at 1.3. Small caps up 1.7 today, so that's kind of nice. Yeah, it's weird to see I know I'm on another screen, but the VIX is actually up today. If you watch the open, I can see why, right? The market's flopping all over the place on the 1-minute chart. Again, you back up, this is a 15-minute, so it looks straight up on the 15. The 1-minute chart tells a different story. So, all right, Micron up, Apple, we talked about, Shopify, so a lot of good quality names. Let's look at the losers. Luckin leading the losing pack at minus 12%. That had to be up. Put Luckin in there, because it was down more than that there for a while. I'm wrong. 326. All right, so yeah, down 12% there. I'm not too worried about Luckin. All right, BLNK is the EV battery company that we're in. I'm in. Take a look at that real quick. So I kind of have $7 as my entry point for that, and I've been doing that for a while, so we'll see. I think 7's pretty safe on the stock, but not today. DKNG's down a little bit. All right, we can switch back along. Go and bring our trading chart back up. You can keep BLNK on the left, BNTX in the middle, and Luckin on the right. Yeah, there's your pop and Luckin. So, all right, leave that up while we start talking about the special acquisition. So, before I go to the Investopedia page, so again, show company. This is how Donkey Kong came public. There was a Diamond Eagle acquisition company, Donkey Kong DraftKings. This is where I first heard about it. Was Diamond Eagles buying DraftKings. So DraftKings was private. So it's like, oh, well, that sounds like a moneymaker. We go back into how do I invest in this? And it's just like, oh, it's through an IPO. And I was like, well, that doesn't seem like an IPO if a company just bought it, right? So they took the DEAC ticker. That's when most of us bought it. And then that ticker went away and basically renamed to DKNG. So again, short circuiting in the IPO process there. All right, so starting to see some green on Blink and Luckin. The NTX just not working. All right, let's switch over to Investopedia. All right, you can read along. So it's formed strictly to, with the intent of going through an IPO, but it's not really an IPO. It is, I guess, an IPO by definition, initial public offering, but not as far as you've seen before. Also known as blank check companies, so that's not good, right? You've always heard to stay away from things like that. But they've been around for decades, but they've gone mainstream recently. Gotcha. I didn't realize this at the bottom. Look at the key takeaways. Look at the last one. They have 2 years to complete an acquisition or they must give the money back. So good to know. That's kind of interesting. There's the inside of SPACs, how they work. We don't need to necessarily know that. Okay, advantages. Selling to a SPAC can add up to 20% of the sale price compared to a private equity deal because they're going to turn around and take it public. What I don't see in here is, and that's the last little bit of it, is the IPO process is very expensive. So if you call up in Goldman or JP Morgan and say, hey, I want to IPO, they'll be like, sure, let's talk, right? And then for those of you who have been through the IPO process, because I know some of you own companies, yeah, that's a pain train. You got to file the S1, and then you get everybody looking into the absolute depths of all your financials to make sure you're actually worthy of going public. So, but very expensive because you got to pay a lot of people, lawyers and bankers, to take a look at this thing to make sure that it's worthwhile. So this obviously seems like short-circuiting that process, so it's going to be a lot cheaper. I'm going to bring up an article. This is from Seeking Alpha, so you can see there the ones that have come up recently, names you've heard of, like Nikola, right? Space came about the same time as DraftKings. I did not touch that one. Obviously, I'm into NKLA. And then there was one more. It's on my phone. I was going to read this to you. It's kind of interesting. It has more names associated with it. Let's see. Graph Industrial was another SPAC deal. Shell, SHLL, if you remember, that's the Tortoise company. It's also EV company there. And Fisker is the next one. So Fisker is the next SPAC to kind of hit it and to open up. And I can't remember the ticker that they're going to go underneath. That's going to become SPAC. But listen to this. Fisker is this for Fisker. Fisker isn't selling cars just yet, although it calls the upcoming Ocean model the world's greenest car. All electric, zero emissions, with vegan interior. What? And recycled materials throughout. So, obviously when you read something like that, that's a big pause. Vegan interior. It's like, to me, that means if you ate it. But anyway, so I guess maybe it's made out of vegetables. You got me. Yeah, right. Just in case you need to eat it. So enough on the SPACs. I kind of think unless the price of an IPO gets cheaper, that this probably you see a lot more of this because they've been very successful. So we'll go back up to TD Ameritrade so we can watch Luckin make a lot of money as it climbs higher. Same with Blink. Let's put Workhorse in the middle there. I'm tired of looking at BNTX. There we go, up 12 on the day, so we'll keep an eye on that. As I look through the chat, Berner joined a little bit late. I gave kind of an update on the, we're up to 920 some downloads, so I had a really good weekend, a lot of conversations there, so getting a lot more traffic, and 3 people actually pinged the morning brief. So we'll see if we can pick up another person or two for the squadron this week. Yeah, Disney Plus content. Yeah, I don't know, but I think that's hopeful. We'll see. All right, let's look at the Q&A. Does it make sense to put money into these shell companies and just hope they go up based on market interest? Are there examples of these things going bust quickly? I'll answer the second part of that first. No. So it's going to happen, right? So you don't go all in on these things, but I am certainly going to poach the heck out of these things as I hear about them. So once I hear about it, I'll put in a small, when I talk about portfolio design, there's your major positions. So if you have, I don't know, $500,000 portfolio, it's like, okay, well, your major positions probably 25 to 50,000, maybe 50,000, up to 10% for like an Apple or an Amazon sort of things. You have major positions, then you have minor positions. So think like 25,000 for major, 10,000 for minor, and then 5,000 for speculative. So this is one of these is you just pop it with 5,000 and it's speculative, so you don't know. But that's right now, I think that's where to put the money. LCA, let's put LCA in place of Blink. LCA is the latest. Again, this is Tillman Fertitta, the Houston Rockets owner. LCA is the latest one. LCA is the SPAC, and then it's going to come out as GNOG, I believe, GNOG. There's already a GNUG. It's coming out as GNOG when they switch tickers, and it's the same principle. So this one, I have 14 kind of drawn as my line in the sand. It's been a lot of congestion around 14. Obviously, it's below that today, but that's 1-2 small position. If it hits, it hits. I mean, when it hits, DraftKings was a triple in short order. But again, got to be smart when you approach these things. You got to keep your eye on them. Shell was another one. SHLL was the tortoise company that popped up. So yes, it's a little more. It's not necessarily long-term best of breed holding that I like, but it's not a bad way to supplement your portfolio there. Okay, that's what I've got for this morning. So thanks again for listening in. Market is holding higher. NASDAQ up 1.2%. So we'll see how today goes, and we'll check in with you again tomorrow morning. See you next time.